Good evening. Good evening. Could you please take your seats? We'd like to get started. Good evening, and welcome to the City of San Bruno. I am Jim Ruane, and as I've been saying for the last 20 months, the very proud mayor of the wonderful City of San Bruno. We're going to have some very special presenters tonight, and we do have some very special guests this evening. Along with me representing the City Council, I do have Michael Salazar here from our City Council, and I just saw Jerry Deal, the mayor of Burlingame, joining us also. I don't know if I've forgotten anybody else, but if I have, raise your hands. We're very happy to have you here at our Senior Center. And as I said, we have some very special guests this evening. We do have our good friend, and I wouldn't say a guest, he's been here, he's like part of the family, Assemblyman Jerry Hill. And also another very, very profound guest who's really helped us a lot this last 20 months, Insurance Commissioner Dave Jones. So welcome, thank you very much. So I'll let them, I'll give it to Jerry in just a moment. You're here tonight to listen to talk about insurance, and there's so many facets of insurance. I'm a small businessman myself, but we were talking to staff a few minutes ago, and I remember the days when insurance and the problems you had with your insurance could be handled with a handshake, and now the world is so very fast. And there's so many people out there that want to take advantage of you, especially senior populations, that it's such a dangerous world to be in now, and we need a good insurance commissioner and staff to follow through. So you hear a lot about that tonight, as well as health issues, property issues, and they're going to highlight a little bit about what they've done and what they continue to do for our City of San Bruno after this terrible disaster we've had. So I'll give it off to Jerry now. Thank you, Jerry.
Jim, thank you very much for the introduction, and our tremendous thanks go to Mayor Ruane for his leadership and the entire council's leadership, because I know he didn't do it alone, but another round of applause for the great leadership of the City of San Bruno. And a thank you to San Bruno for hosting tonight's insurance forum with Insurance Commissioner Dave Jones. We're honored to have him and his team here with us tonight. I also wanted to recognize Lauren Budrus, who is our former retired Chief Probation Officer in San Mateo County. Thank you, Lauren. You know, the support of Jim and the city is a clear sign of the kind of leadership that helped bring the city through the last year and a half, and we all appreciate it, and I know you as residents of San Bruno appreciate it as well. So it's no coincidence that we're here tonight. I also wanted to thank City Manager Connie Jackson, Community Services Director Randy Schwartz, and Wendy Mines of the Senior Center for your great support as always, and accommodation tonight. Well, the issues that are front and center for San Bruno resulting from the PG&E disaster, it was accountability by PG&E, legal issue, and insurance-related matters, as well as a range of other insurance issues that are important to me and to all of us as well. As many of you know, we've achieved several reforms in Sacramento over the last year, in some of the bills that signed by the governor, and I just wanted to highlight a few of them that were the result of this, so that you can have confidence that as we move forward, we're doing a lot to improve and prevent what occurred here a year and a half ago from occurring anywhere else in the state of California. But a couple of, as you know, we have law on the books in the law of the state now requiring remote controlled shutoff valves in high population areas, and the comprehensive testing and proper record keeping of those transmission lines, prohibiting utilities from using ratepayer money to pay for penalties and safety violations that are assessed by the PUC. Also requiring natural gas corporations to meet annually with local fire departments to review emergency response plans, something that you would have assumed had been occurring all along. But we had to place that in law and codify it to make sure that it does happen in the future. Some of the things that I was fortunate, we exempted San Bruno residents from paying state taxes on the recovery money that they received from Pacific Gas and Electric, the Red Cross, and the city of San Bruno after the pipeline explosion. Also allowed homeowners to still receive their residence tax exemption of $7,500, and we were able to prevent the loss to the city and school districts of the property tax due to the depreciated value of the property that was destroyed in the explosion. And still moving forward this year, I have some legislation that will require the PUC to adopt performance standards for pipeline safety and evaluate the state's gas utilities against those standards so that their profit and could depend on whether they are acting in a safe manner or not. We have whistleblower protection now that we're working towards to provide for gas pipeline workers, and National Transportation Safety Board recommendations. Today, they can make all the recommendations that they seem and feel are necessary for safety, and the Public Utilities Commission and the utilities in California can ignore every one of them. And they have ignored just about every one of them over the past. This would require them to take some action, and we need to move forward with that. And we've had some insurance bills in working in the past with Insurance Commissioner Jones, and one requiring insurance companies to disclose cancellation fees to consumers prior to the creation of an insurance policy, increasing the Medical Board of California's ability to protect healthcare consumers by improving the regulation of physicians and surgeons, and also crack down on deceptive solicitations from which cost residents and businesses thousands of dollars a year. So again, thank you all for being here this evening. We're going to cover a number of major issues tonight, implementing some federal health care reforms, protecting seniors from scams, and talk about Medicare a little bit, and certainly as we get and talk about home, some insurance matters related to the pipeline explosion and some issues that have come from that. So our goal tonight really is to be assistance, and to be of assistance to the residents of San Bruno, and to make sure that their needs are met. You will have cards at your seat, as you can see. If you'd like to write down a question that comes to mind during the presentation tonight, and there'll be an opportunity to get those questions asked, and we'll have answers for you later on. So we're very fortunate tonight to have Insurance Commissioner Dave Jones with us. And his staff came from Sacramento with the Department of Insurance are joining us. I have to tell you, I worked with Dave in the Assembly for a couple of years. And, there's some people who kind of go through the motions. There's some people who kind of sit there and pay attention to certain things, and they take the easy way out. This man has never taken the easy way out. He has fought hard consistently, with integrity and with credibility on every issue that I've seen him bring forward to the legislature, and every issue that he's fought for. That's why he is our insurance commissioner today, because there's no one that could do it better, and there's no one that could protect consumers as Dave Jones has been doing. Since he became involved in public service, he has been concerned and protective of consumers and the citizens of California. He's a good friend. He's a friend to all of us, and he will continue to be, and we're so fortunate, and I'm grateful that he's a friend, and grateful that he's here tonight, and grateful that he's our insurance commissioner serving the citizens of California. Dave, thank you for being here tonight. Very much appreciated.
Well, Jerry, thank you for that very, very kind introduction, and it's a treat to be here with you this evening, and this is a fantastic turnout, and I think it's a testament not only to the tremendous tragedy that San Bruno had, but also the spirit of this community and the engagement of its residents, but also the leadership of Assemblymember Jerry Hill. And we're really delighted that he invited us to participate in this town hall. It's been a real treat for me to get to work with him, both as a colleague in the State Assembly and now as Insurance Commissioner. And Jerry always puts the needs of his communities first. He's always accessible. He routinely reaches out to the community and represents it. And as a colleague of his in the State Assembly, Jerry was one of the go-to people. There are always a small number of people in any legislative body that you know you can go to and get good, solid information, detailed analysis, and a really, really strong, thoughtful view on whatever the matter is. And he's got a big heart, too. He cares about this community, loves this community. He really fights for the peninsula. And I want to ask you to join me in a round of applause for your Assembly member, Jerry Hill.
Thank you. Thank you.
And it's my hope that he'll get a chance to continue to serve this great community, because he does such a fantastic, fantastic job. And Mayor, I want to thank you as well for inviting us here. It's a wonderful facility. I was admiring the park out here through the window, and I'm hoping I get a chance to walk through it a little bit later this evening. And it's just a fantastic facility, and we're just delighted to have a chance to come spend a little bit of time with you. You know better than anybody the tragedy that befell this community in 2010, and I don't have to repeat the terrible dimensions of that tragedy. I know that we all owe a great debt of gratitude and thanks to the emergency responders and other first responders who came onto that scene and did everything they could to try to limit death and injury and damage. And I think that this disaster is another example of the tremendous importance of partnership between local, state, and even federal governmental agencies. Our role as the Department of Insurance was as a second responder to come out to partner with Assemblymember Jerry Hill, the mayor, and other leaders in taking stock after the disaster and trying to make sure everything could be done to put the community back on its feet. And so to that end, our department did come out immediately after the terrible disaster to make resources available to the community. I know that there were local assistance centers set up by local emergency responders and Cal EMA. Our personnel were there to answer questions, to provide advice and guidance, and to take complaints that residents had about the interactions they were having with their insurance companies. We worked closely with the San Bruno County Health Department and Public Works and the whole issue of debris removal, making sure that the experience that we had in other disasters, Lake Tahoe, San Diego wildfires, was brought to bear with regard to the county's determination as to how to proceed and who to look for compensation for as it moved debris from 34 lots in which there were total losses. We also were active as well. There was some confusion, I know, as the insurance companies sent their adjusters out and PG&E sent their adjusters out. I mean, the good news was PG&E sent adjusters out. The thing that made it a little bit challenging was for some people that were trying to negotiate and navigate this rather confusing circumstance. They would get some information from PG&E, some information from their insurance company. We did our best to try to resolve those disputes, to mediate, and also to take complaints. We received a total of 17 complaints from consumers. 15 of those have been closed, resulting in over $400,000 in additional payments by insurance companies as a result of our involvement. We have 2 pending complaints that we're continuing to look at, and this evening, if there are still matters that you'd like to bring to our attention, we're happy to hear those in the question and answer. And it's also an opportunity for me, as I wasn't the insurance commissioner during the time of this disaster, to hear directly from you about things that worked and things that didn't work, so we can learn from that as a department. I also want to spend a little bit of time this evening running through some other issues that we're dealing with at your Department of Insurance. One of my top priorities is the implementation of healthcare reform. We began that literally minutes after I was sworn in. I signed into law a regulation giving me the authority to implement here in California one of the most important elements of the healthcare reform law, and that is simply this: requiring the health insurers to put more of our money into actual health care instead of insurance company overhead and profits. That new law requires that health insurers put up to 85% of every premium dollar they collect from us in the large group setting where you have a large employer, and 80 cents in every dollar they collect from us as individuals into actual health care. And so minutes after I was sworn in, I signed that regulation to give me the authority to implement that. If the companies aren't meeting those requirements, then what happens is we can order them to rebate monies to consumers. And in fact, I'll be putting examiners into the health insurance companies later this month to look at their books to make sure they're in compliance with that requirement. We've also begun implementing the other components of healthcare reform, the provisions that require that health insurers allow you to keep your dependents on your health insurance to age 26, the elimination of the so-called lifetime caps. This was the point where even if you were lucky enough to have health insurance, if you had a serious illness, you could hit a point where there was a lifetime cap on the amount of benefits they would pay you. I met a young man in Los Angeles area about 8 months ago now, and he and his physician shared with me he had a very serious blood illness. He was hitting a lifetime cap as of June of last year, and but for the Affordable Care Act, his treatment was going to stop. Thanks to the Affordable Care Act, he's continuing to get the treatment he needs to stay alive, and there are many Californians that have benefited from that provision. If you're a senior, an incredibly important component of the Affordable Care Act is when you hit that point, if you're on Medicare, and you have to start reaching into your pocket to pay thousands of dollars for prescription medicine, thanks to the Affordable Care Act, that donut hole gets closed over time. You now have available to you generics at a 50% discount off of what the brand formula drugs were going to cost. If you are a person that cares about preventative health care, as many of us do, the Affordable Care Act eliminates co-payment requirements for preventative health care. If you're a small business owner and you actually want to provide insurance for your employees, the Affordable Care Act gives you a 35% tax credit to defray the cost of doing so. And a really important provision that I'm also involved in enforcing, and that's the provision that bans the health insurers and the HMOs from simply rescinding your health insurance or HMO care because you forgot to mention something in your health insurance or HMO application. It wasn't too many years ago that Anthem Blue Cross and Blue Shield and the others were doing exactly that. They take your application, they take your premiums month after month, you'd get sick, you'd make a claim, they'd go back at your application, which they had purposefully designed as an open-ended application, ask you to try to remember 20 or 30 years of your health history. Who can remember that? You'd forget some simple thing, and they'd say to you, oh, you forgot this, we're cutting off your health insurance, and by the way, we're going to rescind the payments we made to you previously. Thanks to the Affordable Care Act, they can't do that any longer, and we actually have an administrative adjudicative process at the Department of Insurance, so that if they try to do that, we can hear those cases and overturn them. So a lot of good things happening in that particular area. There is one big missing piece in the Federal Affordable Care Act, though, and that is the absence of any authority for the insurance regulator to reject excessive health insurance rate hikes. Now, I have that authority for homeowners insurance and auto insurance and property insurance and casualty insurance. Insurance commissioners have exercised that authority since 1988 and saved consumers and businesses tens of billions of dollars by rejecting excessive rate hikes. In fact, in my first year as your insurance commissioner, I've saved consumers and businesses $438 million in premiums they would otherwise pay for auto and homeowners and property and casualty insurance by rejecting excessive rate hikes, but not health insurance. I don't have that authority for health insurance. And anyone who's been in California for the last 10 years knows year after year, 10, 20, 30, 40, 50% rate hikes, 152% increase in rates since 2003 to now. And the companies are making enormous profits. Anthem Blue Cross of California made a 21% return on equity in 2010, a little bit more in 2011. Aetna made a 27% return on equity, 27% profit. And so my personal view is that this is just not sustainable, and that there is a very simple remedy, and that's to extend the authority that I currently have over these other insurance lines to health insurance and give me the authority to reject excessive rate hikes. And thanks to the leadership of your assembly member, that's worthy of applause. That's what happens when you gesticulate.
I like that.
Well, I'll talk loud. Thanks to the leadership of your assembly member, we've actually been able to move a bill through the assembly and over to the Senate, Assembly Bill 52, that would give me that authority. It's sitting in the Senate right now. We're hoping to get that bill out. And there's also a consumer group that has a ballot measure that's being qualified for the ballot this November as well. You can learn more about that by going to justifyrates.org. And I promise I won't touch the mic again. Thank you very much. Now, we've also been active on a whole host of other fronts, and I'm happy to talk more about this later on, but just give you a little vignette of some of the things we've been doing. You may have read, I've opened an investigation with John Chung, our state controller of the major life insurance companies across the United States, because they've been leasing from the Social Security Administration a database called the Death, Master File. That's the name of the database, the Death Master File. You would have thought our Social Security Administration might have come up with a nicer name. But it's a database of all the people that have passed away in the United States with their addresses and their phone numbers and their Social Security numbers. And the life insurance company, well, the Social Security Administration has it, so they're not paying benefits out that people have passed away. That makes sense. But they've leased it to the life insurance companies, and the life insurance companies are using it to stop making annuity payments to people who have passed away, and that probably makes sense. But here's where it gets real interesting. Do you think the life insurance companies have been using the Death Master File to determine when a life insurance policyholder has passed away so they can provide that person's spouse or his kids or his grandkids with life insurance benefits? No. I see some shaking heads. Well, if you said no, you're right. And literally billions of dollars in life insurance benefits have not been paid out by these companies, even though they have knowledge that their policyholders have passed away. So we achieved a landmark national settlement just the other week with one of these companies, MetLife, that will result in their disgorging $500 million in life insurance benefits to people that are owed that across the United States. And we're going after each company. We had the same result with Prudential, and we're working on the others as well. So that gives you an example of the importance of this office and the kind of work that's happening in this office behind the scenes. So thank you for the privilege of getting to serve as your insurance commissioner. We're happy to take questions after we get through the other speakers. We have 3 additional speakers this evening who are going to, from the Department of Insurance, and then we'll get to the questions. And I just want to remind folks, if you have those cards, take an opportunity to fill them in while folks are talking, and then we'll get them to either Assemblymember Hill or my staff will collect them up, and then at the end we'll look at the cards. We'll also have someone walking around with a microphone to answer questions too. So the next person who's going to speak is a senior attorney in the Department of Insurance. We're delighted to have her here. Her name is Elena Fishman, and what she's going to talk about is long-term care insurance and Medicare supplemental insurance and Medigap, or that's Medicare supplement. She's going to talk about Medicare Advantage, which is the Medicare insurance you can buy on top of Medicare, and talk a little bit about some other issues that those who are seniors or who love seniors might want to know about with regard to those particular products. Please join me in welcoming Elena Fishman.
Thank you very much, Commissioner. Good evening. Thank you for the opportunity to come here to San Bruno to talk to you about insurance issues. I've been an attorney with the department for about 10 years, and for most of that time I have worked on a wide variety of senior issues. We are giving you just the highlights of some of these topics because they're very complicated. They're really very involved, complex insurance issues. I'm going to talk to you about long-term care insurance first. Long-term care insurance began in the late 70s and early 80s as insurance to pay for nursing home stays. Today, long-term care insurance can pay for services for home care, for nursing home or assisted living services, or for residential care. It pays for supervision or assistance when you have a physical or cognitive limitation that prevents you from performing some activities of daily living, called ADLs. And that's really one of the keys for long-term care insurance. And that includes things like bathing, dressing, feeding yourself, things like that. Long-term care insurance benefits are generally not included in Medicare. Medicare may pay for skilled nursing services for a very short period of time, but not for any long-term ongoing assistance. The cost of long-term care insurance can vary widely, from a few $100s a year if you purchase it when you're really young, to more than several $1,000s a year if you buy long-term care insurance later in life. The biggest issues that we see here at the department regarding long-term care insurance, as the Commissioner has already mentioned, with other types of insurance, are rate increases. Long-term care insurance policies were not inexpensive to begin with, but insurance companies have been asking for higher rates pretty consistently, and the rates for long-term care insurance, for those of you who have this insurance, know that they've really skyrocketed and have gotten to the point where many, many people just feel that they cannot afford the insurance. In order to help solve this problem, Commissioner Jones has sponsored a bill that's currently before the legislature, Assembly Bill 999. This bill will make changes in the way that insurance companies develop their long-term care rates. so consumers will have a greater sense of predictability in terms of how the rates are going to change when they purchase the policy. We're very hopeful that this legislation will be successful and will pass through the legislature and be signed by the governor, and we really believe it will go a long way to help control the volatility of long-term care insurance rates. Some tips before buying long-term care insurance, questions to ask yourselves. The most basic question is, can you afford it? Can you afford it now, but especially to think about, will you be able to afford your premiums when you retire? Assuming that most of us, our incomes will go down somewhat once we retire and stop working. What kind of benefits are most important to you based on your health history, the kind of services that you think you might need as you age, and also the social support system that you have for providing some services for you from friends and relatives? And also how flexible the policy that you're looking at is. What will it allow you to change as your situation changes? Another question to ask is, does your financial situation qualify you for Medi-Cal benefits? If so, if you're eligible for Medi-Cal, then you don't need to buy a long-term care insurance policy. It doesn't really make sense to do that. Before you buy a long-term care insurance policy, you should check out your insurance company's history of rate increases, and we have this information on our website. We publish a rate guide every year that lists the history of rates for all the long-term care insurance companies in California. Lastly, you should read the policy carefully, hopefully with someone who can assist you in understanding it, because it is very long and very complicated. Get all the information you need and really take your time before you make a decision. I'm going to talk a little bit about Medicare, which anyone who's a senior and is no longer working most likely has. Medicare, as you know, is a federally sponsored health insurance program for people over 65 or someone with a disability who is under 65. It has several parts to it. Part A covers hospital stays. Part B, outpatient and doctor visits. Part C is Medicare Advantage, which I'll talk about in a minute. And Part D is the now famous prescription drug program. Medicare pays for health services, but they don't cover everything. Medicare may often pay for 80% of a particular service, but then there's 20% that is not covered. So the question is, what can you do about that 20%? So that's where we come to Medicare Supplement Insurance, otherwise known as Medigap. This is insurance that will cover what Medicare doesn't. It covers the 20% that Medicare won't pay for if your Medicare policy pays for 80%. Medigap insurance is sold by private insurance companies that are regulated either by our department or the Department of Managed Healthcare, depending on the type of policy it is. These policies are generally standardized. They're generally the same no matter what company you buy them from. They have to have certain pieces included. What will be different sometimes is the benefits, but most likely the differences will be the cost from one insurance company to another. And this will depend on the company, and also it depends on the region that you live in. As with auto insurance and other types of insurance, where you live can have an impact on the rates. If you buy a Medigap policy, remember that you only need to buy one policy. Often consumers will be solicited to buy a second policy, even though they already have one. In fact, it's illegal for a company to sell you more than one Medigap policy. Remember that if you have full benefits under Medi-Cal, you also don't need a Medigap policy. Another program we just want to touch on is the Medicare Advantage program, and this is Part C from Medicare. It's an alternative way to receive health benefits rather than the traditional Medicare policy. Private insurance companies sell Medicare Advantage plans. You'll get all of your Medicare covered services, but you will get them through a private company and whatever Medicare Advantage plan you choose. So again, the question is, why should I buy a Medicare Advantage plan if all the services are the same as the ones covered by Medicare? And the answer is that although your Medicare Advantage plan will provide the same services as Medicare, often these plans will include additional benefits, such as dental, vision care, or a prescription drug plan. Most Medicare Advantage plans charge a monthly premium that is in addition to what you'll pay for your regular Medicare, the Part B, which is doctor's visits. Sometimes there are restrictions in the network of doctors who you can see under a Medicare Advantage plan, and of course there are also co-payments for services. Tips for buying Medigap and Medicare Advantage plans. Most important to beware of high-pressure sales tactics, particularly for seniors. Insurance agents just can often really pressure you to purchase something right away without really giving you the time to carefully review it and talk to trusted friends and professionals about what you're buying. So beware of those tactics, and especially beware of promises that sound too good to be true. As you all know, if it sounds too good to be true, it probably is. And you have to be very careful of that. One of the problems that we see with the agents is that misrepresentations are given to consumers about the costs of these policies. The monthly premium may sound great, and it may really seem like you'd be saving some money, but if you don't also know about copays and any other costs that you're going to have to bear, you may end up buying something that will cost you more than what you originally expected. The other important issue is to find out whether your doctor, who you see, who you trust, and who you want to continue to see, is part of the network of doctors that are included in your plan. If your doctor is not, and we've seen quite a bit of this happen, you buy the plan, you sign the papers, and then you find out, oh my gosh, my doctor, I can't see my doctor. It is possible to reverse that and have the policy canceled and get your money back, but it's quite a lengthy procedure and very difficult to do, even with our help and with some of the federal regulators' help. If you think you've been a victim of unscrupulous sales tactics, misrepresentations, high pressure, forgery of your signature on an application, call us. We are here to help you. We can be the first call you make. If it turns out that your policy is regulated by another department, we will refer you to them and make sure that you get the kind of service that you need. Okay, I am now going to spend just a couple of minutes switching gears and talking a little bit about annuities. This is an area that has been just fraught with scams against seniors. You've probably read some of the cases in the paper. There have just been absolutely horrific situations. Dale is going to talk a little bit about some specific cases in a couple of minutes. An annuity is a complex financial insurance product, and most people don't realize it is an insurance product. It's a contract between an individual and an insurance company. It's often used in retirement planning as a way to provide some financial protection against the risk of outliving one's resources. And this is what we're told when we start looking into an annuity. It generally pays higher interest than you can ever get on a CD when you put your money in the bank. So it's very appealing to all of us as we get older. The individual pays the insurance company money either in a lump sum or over time, and depending on your contract, you then will receive that money back either in monthly payments or in a lump sum. And theoretically, your money will grow because it's earning interest. Annuities can be a great product for the right person, but they aren't for everyone. It's very important that you discuss purchasing an annuity with someone you trust in addition to the agent who's trying to sell it to you. There are many, many pieces of an annuity that you really need to understand, and we have a handout in the back with some of these tips written down. You need to understand how it works. You need to understand about fees and charges that will be incurred if you want to change the annuity, if you want to withdraw money ahead of time. And you also need to talk with somebody who can look at whether the annuity really fits your needs. Some unscrupulous agents have persuaded seniors to invest all the money that they have available to them in buying an annuity, whether it's stocks, bonds, savings, even replacing an existing annuity with another one and being told, oh, the new one will be much better for you. And what the agent sometimes doesn't tell you is that they will make a very large commission on selling you the second annuity and the third annuity and each subsequent one. So you really need to be very, very aware and make sure that you get all the information. There's a new law that went into effect last year, Assembly Bill 689, requiring insurance companies to establish a system to supervise their agents who are selling annuities. They have to look at a series of criteria and make a determination whether this annuity is suitable for the person who they want to sell it to. Things to ask your insurance agent before you buy an annuity. There's a whole list of things. You want to ask them about surrender charges, degree of risk, introductory interest rates, guaranteed, whether the annuity is guaranteed, replacing an existing annuity with a new one, and especially how much commission the agent will receive from selling you this annuity. Before you buy an annuity, there are 2 calls you can make that would be really helpful and give you a lot of information. One is to our department's hotline to check on the agent who you're working with, and also to check on the status of the insurance company that you're going to be buying the annuity from. Our numbers are all over our materials, but our helpline number is 1-800-927-HELP. You also can call the Department of Corporations, the Seniors Against Investment Fraud hotline, to check on the security salesperson. Final tips regarding annuities. Never meet with a salesperson alone in your home. Don't give them any of your financial information if you're there by yourself. Never allow them to pressure you into filling out a form just for now or signing anything on the spot. Always take the materials and look at them and go over them with some trusted friends. Don't let them sell you an annuity if you're to try and qualify you for some other government programs. And always use the 30-day free look period that the law gives, especially to seniors, to review the annuity or life insurance purchase with trusted friends and relatives. If you decide in those 30 days that it isn't for you, you return the contract to the insurance company. So please stop at the back tables at the end of the evening and pick up the materials we have. And thank you so much for coming.
Thank you very much, Elena. That was a tremendously useful and thorough explanation of those products. And we also have a very helpful videotape that we put together at the Department of Insurance that does some role playing, and that's very useful for seniors and their family members to look at, to see the kinds of situations that one might want to avoid. And I think I noticed a beautiful library in this community center, and I think what we'll do is we'll make sure we get a copy of that videotape here in the community center so folks can look at it here and get a little more detail about these sorts of things. Our next speaker is Dale Weissman, and Dale is a part of our enforcement branch. At the Department of Insurance, we not only have responsibility for regulating some of the rates and for approving some of the products and for making sure the companies remain financially solvent and for having a consumer hotline that takes consumer complaints, and we have lawyers that help us issue regulations, but we also have law enforcement officials that work for us, and their job is twofold. One, to investigate fraud, and second, to investigate misconduct by agents and brokers. And before I introduce Dale further, I just want to preface this by saying that unfortunately in our department, we sometimes see some really egregious behavior by individuals. It seems like there are so many ways that people that want to do bad things can figure out how to do bad things. But we know in our department, as in life generally, the vast majority of people do the right thing, follow the rules and obey the law, and that's true for the agent and broker community too. Thankfully, the vast majority of agents and brokers are ethical. They're licensed by us. They meet their community and their continuing education requirements, and they stay within the 4 corners of the law. But unfortunately, in any community, there's always some knuckleheads who are going to do the wrong thing. And we end up seeing them, unfortunately, and that's part of our job. And so you're probably going to hear some horror stories in a moment, but we're really delighted to have with us today one of our senior investigators from our enforcement branch, Dale Weissman. Please join me in welcoming him.
Thank you, Commissioner. My name is Dale Weissman. I'm a senior investigator out of the Benicia office. I'm here to tell you a little bit about what can happen and how you can protect yourself. As Elena spoke about earlier, when it comes to annuities, what you have to worry about is what we call pretext interviews. These are instances where people will use a ruse to try and gain your financial or your emotional states or your mental states. Some examples of those were, in the past, we used to have what they called living trust mills. These were people who would have big advertisements in the newspapers, or they would advertise that if you come to one of their lunches or free dinners, and they'll talk to you about financial planning. The purpose of that was to get you to come to their seminars, and they would have attorneys and insurance agents there present these great plans to you, and then get you to agree to have them come to your home and get more information from you. Well, the purpose of that is for the insurance agents to come and to determine what your financial status is, how much money you have, where do you have your money, is it invested, where is it invested? Also, the agents will check your mental status. Does this person understand what I'm talking about or not? We passed laws to kind of put a halt to that. Well, they start something else. The next one came up was reverse mortgage scams. You heard about those, right? Yeah. They advertise to be able to present to you a way to get money out of your homes so that you can use that to purchase whatever you need. Home improvements, take vacations. Same principles applies. They come into your home, they find about your financial situation, and then they take advantage. Pass the law to try and stop that from happening. The latest ones we've seen is called Veterans Benefits Scam. And what that is if you're a veteran, you're entitled to a program sort of like Medicare, where you can get health care taken care of through the federal government. Well, they call themselves counselors, and they'll charge you, we've seen up to $10,000 to pre-qualify you to get these benefits. Same thing happened in the past with Medicare. What they do is they find out how much money you have, and then they tell you have to spend that money down so that you can get to a certain level where you qualify for these benefits. What you have to worry about is that once they spend all your money or have you gift all your money, you're left with nothing. And then when you try and qualify for these programs, the government finds out about this and you won't qualify for it. So you have to be very careful about that. In addition to doing that, when they learn all about your financial positions, they will tell you that you need to buy an annuity to hide that money or to save money for your beneficiaries, whatever. You have to be very careful when you try and buy an annuity, as Elena has said in the past. I want to give you an example of a couple cases that these things happened. We had a case where this gentleman called himself a financial planner, and he met with seniors, told them that he can invest their money, get them tremendous interest on their money. He collected about $1.5 million from his clients. We did a long investigation. We partnered with the district attorney's office and found out that this guy was pocketing that money. He bought 2 airplanes, several cars, took many vacations, bought a ranch. He was living really large with that money. None of the people got their money back. Fortunately, partnering with the district attorney's office, we were able to arrest him and get him convicted. He served 3 years in prison and was ordered to pay the money back in restitution. Now, I'm not sure if they'll get their money back in restitution, but at least he's off the streets. The mayor said earlier that a long time ago it used to be a gentleman's game. And I can remember when I first started with the Department of Insurance, I had a case involving a senior citizen. I went to their house because we had a complaint that she had bought multiple insurance policies. Well, when I got to her house, I knocked on the door and asked her if I can come in and talk to her about it. And she allowed me into her house. I told her I was with the Department of Insurance. I gave her my business card and wanted to speak with her about insurance. She thought that I was from the insurance company and wanted to sell her another policy, and she was willing to buy one right away. So what I learned from that was that, like Elena said, you must have somebody with you whenever somebody tries to sell you something. But this was one of the first cases that I'd done. This was back in the 80s, and when I'm talking about a gentleman's game, back then, all we did was when we found somebody had violated the insurance code, we went after their license and got them revoked. Nowadays, it's much different. The predators out there are worse, and so we're hardline with them now. Nowadays, if we find somebody taking advantages of seniors, we go after them criminally. We have a case up in Lake County right now where a gentleman sold an annuity to a lady who was diagnosed with dementia. She had been diagnosed with dementia 5 years before he sold her this policy. He claims that when he met with her, she was lucid. She knew everything that she was talking about. Fortunately, the people that dealt with her knew better. He had her go to the bank and withdraw all of her monies to buy this annuity. Fortunately, the bank personnel recognized that she was dementia. She suffered from dementia. They called the Adult Protective Services Department, who contacted her and also determined that she was suffering from dementia. They referred it to the district attorney's office, who referred it to us because we are the experts. We partnered with that district attorney's office, got the guy convicted for theft by false pretenses and elder abuse. Speaking of partnering with district attorneys, we have what we call the Life and Annuity Senior Protection Program. It's a program where we partner with district attorneys' offices to prosecute life and annuity sales abuse. Fortunately for you guys, San Mateo County is one of our partners. And I want to let you know that San Mateo County, one of their inspectors is here today. Her name is Andrea Higgins, and she's very good at investigating these types of cases. Sandra? Excuse me, it's Andrea Higgins.
Stand up again so people can see you.
It's Andrea Higgins.
There she is.
Okay, I want to give you just a few things to do to combat becoming a victim, but Elena must have talked about most of them, but I'll repeat them. Never meet with a salesperson alone. Always have somebody there with you who can be your eyes and ears. Make sure that they always leave documentation with you so that you can look at it and we can review it if we have to. Never make a decision to buy a product on the same day. If you can buy it today, you can buy it tomorrow. Don't be like a car salesman. The deal will never go away. It'll be the same. Trust, you can trust, but verify. You know, if they sell you something, don't take it on first value. Computers are very good these days, so they can print out documents that tell you what you want to see, but always verify. As Elena said, there's a 30-day free look period. Make sure that you use that. Not only you, but have a trusted professional look at the documents that you receive as well. Also, the department has a website that's very, very, very helpful. As the commissioner said earlier, there's video in there, how to protect yourself from unscrupulous salespeople. There's all kinds of hints on how to protect yourself at that site also. It's www.insurance.ca.gov. Also, the San Mateo County DA's office has a hotline. They can be reached at area code 650-363-4936. And I look forward to answering your questions later. Thank you.
Thank you very much. Thank you very much, Dale. And if you know of a senior that's being taken advantage of, we want to hear about it. I know your district attorney wants to hear about it. The Department of Insurance wants to hear about it. Your assembly member wants to hear about it. These are all places you can go to contact if you see someone in the community that's being taken advantage of, because we have a zero tolerance attitude with regard to that. But you are our eyes and ears. We need you to report it to us so then we can investigate. I just was thinking as I was going through in my own head all of the incredibly important bills that your assembly member either introduced or supported in the wake of the disaster that occurred here. And I think it's a hallmark of a great legislator, not only that he's available to the community and responsive when disasters like that occur, but he wants to hold accountable those who are responsible. And I hope you'll support him in that legislation and make sure that the decision makers who allowed what happened to happen here are held accountable and they can't skate free with multi-million-dollar golden parachutes or whatever it is that they're allowed to do as a result of their getting away but not being held accountable for the bad decisions that they make. So I'm real excited about supporting him in this endeavor, and I'm sure you will as well. We're also joined here this evening by Tony Signorelli, who's one of the senior leaders in the Department of Insurance. He's a Deputy Commissioner for our Consumer Services and Market Conduct Branch. And Tony's going to talk a little bit about disaster issues and insurance, and in specific, the pipeline explosion and disaster that occurred here in San Bruno. Please join me in welcoming Tony Signorelli.
Thank you, Commissioner. We really want to get to your questions, and so I'd like to touch on a couple of issues. Homeowners insurance, how to file a complaint, and how that relates to our past experiences here in San Bruno, as well as, basically everyone statewide. We're all witnesses, especially here, that you don't have to live in a like a high-risk forest area to have a widespread insurance issue happen with damage that necessitates having enough coverage to protect yourself in the event that you do suffer a total loss to your basically your primary investment, which is your home. And so a couple of tips, and I will mention also that we have numerous guides and information online and in the back of the room, and at any point in time, whether it's today, tomorrow, or next year, please contact us with any questions that come up on homeowners insurance or any issue that arises. With regard to homeowners insurance, the first thing you want to do is take out your insurance policy and your what's called a declaration page. Your insurance policy probably has a lot of dust on it, like mine does, but get it, take a look at it, get your declarations page. That's your cover page of your policy that tells you the amount of coverage you have for each of the different categories of coverage. How much coverage you have, what's your policy limit for your structure, what's your policy limit for your contents and personal property. Do you have code upgrade coverage, that sort of thing. You need to get that out, you need to look at it, and as well, while you're looking at it, decide whether you not only need homeowners insurance, but maybe you need to look at earthquake insurance and possibly flood insurance depending on where you live. But the same tips I'm about to give really apply to all of those in terms of making sure you have adequate coverage. First, look at the kind of coverage you have. There's various degrees of coverage. The strongest coverage and the best coverage is called guaranteed replacement cost coverage. That coverage will basically pay the full amount to replace your home, even if your policy limits aren't enough to pay for it. So it'll go above policy limits. Basically, it's because it does that, I will say that it's fairly expensive and it's not available to everybody, and not many insurance companies write it. But please look for it, see if it's available and it might meet your needs. The next level of coverage, which is more common and more readily available and more affordable, is called extended replacement cost coverage. Now that coverage will pay up to your policy limits, but it will also pay for a percentage above policy limits that you've purchased. So you purchased that extended coverage of, let's say, 50% or 25% above your policy limits. So if you need that additional money to completely rebuild your home, that money will be available to you to reconstruct that home. The next level of coverage is replacement cost coverage. That will pay the full amount to replace your home, but only up to that policy limit, not above it. The next level of coverage is called actual cash value coverage. It isn't common in California, but it is under certain policies in certain high-risk fire areas, and that will basically pay a much lesser amount than even replacement cost, and only up to that lower policy limit. The additional part you want to look for, which I mentioned a minute ago, is building code upgrades. Make sure you have that, especially if you have an older home. You'll find, and we found after the many wildfires over the years, as well as even in San Bruno, that the older homes require a lot of the codes that went into effect for, let's say, the last 20 years. There's that additional cost involved in bringing that, rebuilding that home. Building code upgrade should take care of at least a portion of that. Once you know what kind of coverage you have or what kind of coverage you think you want to look at each of the various categories of coverage to make sure you have enough. The first two categories is your primary structure and your adjacent structures, your sheds and your outhouses. In that sense, outbuildings, I'll say.
How many people still have an outhouse here in San Bruno, huh?
And so what you want to know there is how much will it cost to completely rebuild the home? So if it's completely destroyed, we found in the past where some people were insuring for just a portion of the reconstruction, thinking maybe the foundation didn't need to be replaced, even in the worst kind of situation. We've seen with, especially with earthquake, but even with the fires, that the way they've come recently is they've come with such, I guess, ferocity and quickness and the heat that the foundations are completely destroyed and unusable. And not with, even with that, even if they're not, a lot of the code upgrades these days will require a complete foundation replacement. And so we found a lot of these coverages that people were getting didn't even include the value of their foundation. So make sure that it covers everything that you need to replace that home. You can get a contractor to give you an estimate. Your insurance company or your agent might give you a number. If they do, a new regulation went into effect last year, which requires that agent or broker or insurance company, if they give you a replacement cost figure, they need to give you a detailed report as to how they derive that figure, with a breakout of your kitchen, your roofing, your type of materials they use, the quality of the materials, the foundation, the cost for debris removal. All those things need to be included in that, and make sure that if you do get a number from your agent or broker, that your insurance company is or your insurance company, they're providing you with that information. The next category is contents, personal property. Make sure you have enough coverage there. It's important in that area to do a home inventory. We have home inventory booklets in the back that you can use. That's helpful in two ways. Number one, to make sure you have enough coverage, but it's also going to help you if you do suffer a loss, you'll already have that contents inventory done for the most part, and it'll be a lot easier for you to submit that information to the insurance company to get your payment back quicker. There are also some electronic versions of the home inventory. You can go on our website. I think we have a link to a few of them that you can go and do that electronically. You could also find some online. The importance there is making sure you itemize all the major components, personal property, electronics, appliances, and all the other aspects of your home. Take photographs, take video, put that information not in your house, but away from your house, either a safety deposit box or with friends or family that live elsewhere. The last category is additional living expense. There's not a lot you could do with regard to how much coverage you get there, because it basically comes from how much your limits are. It'll flow from that. But the important part there is to know that if there is a disaster in your area, you are required, the insurance company is required to give you 24 months of additional living expense coverage, even if your policy has a shorter period of time. Now, once you've gone through this whole process and making sure you have enough coverage, you're going to look and see whether you can afford that premium. And so what you want to do is find ways to mitigate that cost. There are various ways you can do that. You could increase your deductible. So if you have a $1,000 deductible, you increase it to $2,000, you might see a substantial decrease in premium. There's other ways you can look for. Make sure you contact your agent or broker or insurance company and ask for their entire list of discounts and credits. You may have certain discounts that aren't on your policy that you don't even know about, such as security measures and fire alarms, and there's a myriad of them. And make sure that if it pertains to you, you have a credit for it. Lastly, I'll just talk about in general mitigation in general. It's one thing to have enough coverage, another thing to make sure that you can get your claim paid. As important, sometimes more important, is mitigating your property, making it defensible to a fire. I'm not going to talk much about it, but I would suggest that maybe you could go to the CAL FIRE website. They have a great checklist for how to mitigate and create defensible space around your home, what to look for, what not to put on your property, what to remove from your property, that sort of thing. And we highly recommend that. And we either have the information back there in one of our guides or on our website, or we can provide that information to you. And with that, I'll just end by saying that the Department of Insurance, we receive 200,000 phone calls a year, assisting consumers, 35,000 written complaints that we investigate. We recover $50 million a year for consumers on a case-by-case basis, looking at individual complaints. If you, again, whether it's today, tomorrow, or next year, or 5 years from now, if you or a family member have any issues with regard to insurance, that's health, homeowners, life, auto, annuities, everything, give us a call, and we'll do our best to point you in the right direction or intercede with your insurance company to make sure that they fulfill their obligations in paying their claim or otherwise handling that transaction. Thank you.
Thank you. Thank you very much. So I think at this juncture, we'd like to move to questions and answers, and we're happy to receive those. And the Assembly member staff has broken them out by person, which means I don't have to go first.
And if I could, Commissioner Jones, just introduce City Council Member Rico Medino, who is in the back, part of the dream team of leadership in the city of San Bruno. Rico, thank you for being here. Welcome.
Okay, so I guess I will go first. Let me read the first question. If I can't answer it, I'll defer to some of my experts here from the department. The question is, what is the Department of Insurance doing to eliminate second or third-party indemnification clauses from contracts? This is an unfair business practice that unjustly shifts the burden of insurance upon small contractors. Well, I know a little bit about that because when I was in the legislature, I worked on that issue. And what was happening was that general contractors were requiring subcontractors to enter into indemnification contracts that required the subcontractor to indemnify not only for their portion of the work, but for all of the work on the project. So if you were the roofer subcontractor, the general contractor was saying in order for you to be able to bid on the job and get a piece of the job, you'd have to indemnify for the walls, the windows, the concrete work, the basement, the foundation. And it was a way for the general contractors to shift the risk downstream to the smaller subcontractors. And then if there was a lawsuit because there was some construction defect and the general contractor was sued, they would then drag in the subcontractor relying on these indemnification clauses. So I was pleased to actually author several pieces of legislation that eliminate the ability of general contractors in the commercial context to do this, and also eliminate their ability to do this in the public works context, because what was happening was some cities and counties were taking the same approach with regard to public works. They would write a contract, and that the contract would then say that not only the general contractor would be on the hook, but the subcontractor would be on the hook for the whole project. Even if the subcontractor was just doing the sidewalk, they'd be on the hook for the roof, the windows, the walls, the whatever. So the law in California prevents that. Now, of course, everyone being creative as they are, then the next thing that occurred was the general contractors started saying, well, okay, that's great, but we're going to drag the subcontractors in to pay for all the defense costs associated with the litigation. So then I authored another bill when the support of the Assembly member. We said, no, the subcontractor only has to pay for its share of the defense costs. So that's the state of the law right now. If there continue to be these kinds of issues, we have some staff here on hand, and if there are subcontractors in the audience, because everybody else's eyes have just rolled into the back of their heads on this one, but if there are subcontractors in the audience or anybody else that is following this rather obscure issue, it's important, let my staff know, and we're happy to look into it. But this is one where I've actually been able to do some good work. Oh, there's one other piece. You can ask me a question and I'll go on for hours. The same darn thing was happening to the design professionals. This is the other piece of this thing. You're the architect and you're drawing the plans and you're required to indemnify for the whole project. So the roofer gets it wrong and you're just the poor gal that drew the plans. Now you're on the hook for the whole thing. So I did a bill that says you can't do that to architects and design professionals either. There's no doubt that they found some other creative way to go around these things, I'm sure, but that's what we've been working on. Jerry, you want to take one now?
These are still continued. This is regarding 810 and SB 810 single payer that applies, I think, for both of us. I mean, we've both been very supportive of single payer, and Dave Jones has been a leader in that movement to try and resolve some of the issues that he indicated earlier related to health care. And the question, in the event that the Supreme Court rules the mandate unconstitutional, will California's SB 810 become the next opportunity for healthcare reform in California? Well, I think that certainly is an issue that we've been supportive of and trying to bring forward, and I think that will be the next effort that we'll have to pursue in that regard. And Dave, you may have some questions. I did receive a couple of questions that were unrelated to insurance. They're more related to pensions. And so if you'd like to see me after, I'd be happy to talk with whoever wrote the questions related to that. So we want to kind of keep it focused on insurance this evening. And here's some other, I think, specific to you more than to me, Dave.
Great. And the only thing I would say, in addition to what the Assembly member has very eloquently said with regard to the whole issue of health care and health insurance, is that I do support, as he supports, a single-payer universal health care system. I think that's where we should be. Unfortunately, that's not the reform that came out of Washington, but the reform that came out of Washington has a lot of good in it. And my own personal view is, if we don't move forward with implementing it and point out the good things in it, if that is stripped away, either by the Supreme Court or by other means, then there'll be no foundation on which we can build to get to an even better place. So we're all watching with great anticipation to see if, in fact, our Supreme Court and its conservative wing calls balls and strikes, or decides to not call balls and strikes and to reach out affirmatively, as they have said philosophically they won't, and strike down a law that was adopted duly by Congress and the President. Right now, both the administration, that is the Obama administration, as well as myself as insurance commissioner and Jerry Brown as our governor, are moving forward with implementation here in California. And our hope is that the law will be upheld. If it's not upheld, there are a variety of options available to California, and I know that Jerry Hill is going to be in the forefront of that conversation. One is California could move forward with its own version of the Affordable Care Act. In fact, we debated doing exactly that in 2005, and another state, Massachusetts, did exactly that. So that's an option for us. So we'll have to see what happens, and I'm optimistic that the various benefits I described in my opening remarks, and there are a lot more, I could have gone on at greater length, don't get stripped away, because there's a lot of good things in that law for Californians, and I think it'd be unfortunate if we lost it. So, Tony, you want to take a stab at one of the questions that's been asked of you?
Sure, I'll give it a try. What I might do is ask that I will try to couch the question, but maybe it might be best if it's very specific, if maybe we stay later and we can talk very specifically about it. In essence, how important would it be to indemnify your house if you are in the disaster neighborhood and selling to PG&E as is with full disclosures, and they won't indemnify me presently? I think I would need to know a little bit more information on that. I'm not sure whether you're talking about the insurance aspect of that versus the other. Okay, do you want to talk later about that, or we're happy to oh, that'd be great.
Great. Here's another question. How much can insurance companies raise rates on auto insurance? That's a great question. And sometimes it seems like the sky's the limit. You know, in California, in 1988, the voters passed a very important law called Proposition 103. And that was a law that was written by a consumer group called Consumer Watchdog. And what that law did, among other things, was it gave the insurance commissioner the authority to reject excessive rate hikes for auto insurance and homeowners insurance and property insurance and casualty insurance. But as I explained earlier in my remarks, not health insurance, not HMO insurance. But as to those other insurance lines, insurance commissioners have been exercising the authority under Prop 103 and rejecting excessive rate hikes, and have saved consumers and businesses literally tens of billions of dollars as a result. Now, the insurance companies all said at the time that that law was being considered by the voters in 1988, that if that law passed, they were out of here. They weren't going to write any more insurance in any of those product lines. Well, in fact, they're all here. They're all still writing insurance in those product lines, and they're making a reasonable rate of return. So I think that's good evidence that we could do the same thing for health insurance. We should extend that law to cover health insurance and HMOs. and give the insurance commissioner the same authority to reject excessive rate hikes in that area too, because without it, my sole authority is limited to this. I can sentence the insurance company to my website if I think their rate is unjustified. That's it. I can put the big scarlet U on them and put it on my website. Well, in fact, we've used that to good effect to get some rate reductions using the bully pulpit from some of the health insurers last year. But you may have read in the papers just the other week, Aetna came in with yet another proposed rate hike for small businesses. Over a 2-year period, a 30% increase in health insurance rates for small businesses. These are small businesses that are hanging on by their fingernails to try to continue to keep their doors open and provide health insurance for their employees. 30% rate hike. We looked at it, our actuaries looked at it, we concluded that they were overstating both utilization increases and per unit medical cost increases, and the rate was not unjustified. I talked to Aetna's CEO about that, she disagreed, and they went ahead. I found it unreasonable, she disagreed, they went ahead. Aetna, mind you, made a 27% profit last year alone, paid a $1.75 billion dividend to their parent company. In my view, that rate was unreasonable, but I don't have the authority to reject it. I'd like to have that authority because I think we could do a lot of good with it, but right now we don't have that authority. Elena, do you have a question?
I do. The question is, does the federal government or state of California subsidize either the Medigap or Medicare Advantage programs? I'm not aware of subsidies from the state or federal government for these programs, and primarily I think because we have access to regular Medicare or to Medi-Cal in California, so that very basic health care is available to folks. I don't know if there are any subsidies from private organizations. I suppose that's possible, but my guess is not very likely. The other question was, is this another source of revenue for the insurance industry? I think, as you've heard, there are many, many, many sources of revenue for the insurance industry, and the commissioner is trying to make sure that their revenues are fair and appropriate by some of the legislation that he's sponsoring regarding rates. So, thank you.
Tony, do you have one?
Yes, and I think this might be another one we would want to maybe speak to the person and try and help them individually. But generally, it talks about how when you quit your job or you lose your job and you need to have continuity of coverage, and there is a law, a federal law, COBRA it's called, and it allows you to continue to receive coverage so you don't lose your coverage for a period of time for a certain premium. It may be a little higher than what you were paying while you were at your job, but at least you can keep that coverage for a certain period of time. In this case, the issue was that the employer switched to a self-funded plan and then said, you're not eligible for COBRA, we don't have to follow that law. So my first suggestion would be, let us take a look at that, let us see exactly what happened here, see if it's something we could take a look at, or maybe we could work with the U.S. Department of Labor on if it is in fact a self-funded issue. There should still be similar protections, and so it might be just misinformation being provided by the employer, but we want to look at the specific issue.
And Dave Althausen has a question in the audience.
Hi, my name is Don Becker. I have a healthcare question. On a national level, even if the legislation goes through, the Congressional Budget Office has said that there'll still be 27 million people uninsured at the end of 5 years. So in California, we have a bill, Senate Bill 810, it was referred to earlier, that would provide health care to everybody and save billions of dollars for everybody in the state. So my question is, and it was blocked this year as 6 Democrats joined with 15 Republicans to block it in the Senate. So my question is, I guess this is for Assemblyman Hill, well, it's for both of you. What will you do to help build the foundation to move that forward and to get the private insurance companies out of our lives? I mean, my opinion is it's like you mentioned, the contractors trying to play this game and that game. Insurance companies play the same game. They're in business to ensure the healthy and avoid the sick. And they're like, the sooner we get them out of our lives, the better. Thank you.
Well, thank you for the question. The challenge in Sacramento, and as the commissioner knows, since he was in the legislature for a while, is that in many cases politics trumps good public policy a lot of the time, 70–80% of the time, and this is a good example of that. The bill struggled and Senator Mark Leno from San Francisco is the author of the legislation, and it has a problem in the Senate getting out, and it's difficult. You know, I sit in the Assembly, which is the other house, hope to be in the Senate one of these days, but it does have a problem, and what we're trying to do is work in a way of bringing people together in the legislature in total, Assembly members and senators who are supportive of the legislation, to try to kind of move the bar down the road a little bit more, and that's what really the effort is, and hopefully we can get it out of the Senate into the Assembly and then move it to the governor. I mean, that's the goal. It's a challenge because of the politics. It's a challenge because of the opposition, but there certainly is a lot of public support for it. So it's an effort that we're working on and will continue to.
And I think I definitely agree with the Assembly member, and I've been proud to stand with him in support of that legislation and other bills previously introduced on this topic. I think we've got a big job ahead of us in terms of public education. Unfortunately, if you were to poll it right now, I don't think you'd find a majority of California voters at this point. And so what's happened is I think that the opposition, unfortunately, has mischaracterized, demonized, and in many ways framed the issue in a way that makes it a challenge for those of us who support it to convince folks. And so we've got a big job ahead of us, I think. But as I alluded to before, I think that job gets even tougher if the foundations of that reform get torn down. And so that's why I'm working within the existing legislative framework that was passed federally and by the state. I'm looking for ways to improve it through the measures that I described a moment ago that would give me more authority over the rates, and then looking towards trying to build towards single payer and convincing the majorities we need that it's the right option. I think it is, but we've got some convincing to do of folks. Let's go to the audience again.
Yeah, hi. More on health care and how California could save some money. I'm an RN at San Francisco State University. My vision, dental, and Kaiser amount to $1,600 a month. I'm a half-time nurse. My gross income is $1,800 a month. So it's almost 50-50. Under Senate Bill 810, the California Universal Health Care Act, California would save $1,200 a month. The expenses would be funded by payroll taxes from my employer and from myself. And it would no longer be a benefit kind of a thing, which would not lock people into jobs. People would not be working for health care, as 60% of Americans are now. So, Assemblyman Hill, will you co-sponsor Senate Bill 810 when it's introduced again in 2013?
And I don't know, I'm trying to remember if I co-sponsored it last time. And I think I may have. So it's something that I will look at and certainly will do that, certainly. So.
Great question. Tony, I think you've got another one there.
Sure. This question involves auto insurance. Why are auto insurance companies allowed to sell only a $5,000 limit of insurance when that does not cover the actual losses? That's true. There's a financial responsibility law, and the minimum limit that is required of the public in California is for property damage is $5,000, which is not enough. It's a law that passed many, many years ago. It has not been updated. It does result in the the person who was damaged by the at-fault person with the insurance company, that third-party claim, so to speak, that insurance company will only pay up to $5,000, even if they have a Lexus, or even if it's $10,000 or $15,000 or $20,000 in property damage. And what that causes is the policyholder to then potentially be on the hook for that difference, and it's leaving that policyholder hanging. Two things. One, even though that $5,000 is the minimum limit, most insurance companies allow and sell higher limits. And so the first thing you want to look at is what are your limits for your auto. Although you're meeting the minimum financial responsibility laws with the state, should you buy more coverage for bodily injury and property damage, or even uninsured motorist, and look at those premiums to see if you can afford them, and it's probably worth it. It would take a change in the law to increase that limit, but it is an area that is not uncommon for us to get complaints about.
Got another one for Tony.
Maybe we can go, if there's...
Sometimes the handwriting is hard.
Yeah, let me...
I think it's if there's a claim and the insurance company is dragging out resolution of the claim. When the insurance company or the person that's liable for the underlying accident is refusing to settle, dragging out the settle.
Yeah, so this involves an auto accident where the person that hit the other person and their insurance company are dragging the case out so long that to hopefully get the person that was hit and damaged to go away, or even in some cases maybe lose their legal rights to sue and recover damages from that party. The first thing is at any point in time, because there's a statute of limitation, let's say in 2 years in some instances, well before that, if anyone is receiving an insurance company dragging their feet, or the third parties not responding to their insurance company, and the insurance company is using that as an excuse to not pay the claim quickly, then come to us. Let us take a look at that. The insurance company at some point has to investigate that case fairly, even if their own policyholder is not cooperating with it, and we will ensure that they do that, and that will speed things up, and we'll make sure they're fulfilling their obligations, notwithstanding the dragging their feet either by the insurance company or by the at-fault party.
By the way, I just found out I did co-author 810 the last time.
Okay.
Do you want to?
Yeah, right over here. Yeah, let's go ahead.
And the people dragging their feet, and specifically one of the questions was mine, and I've got documentation which I'm happy to prove, but what's happened is I have a car that was valued for $26,000. Geico is going to give me 16 because of the limitations, and because that's not fair, they said, but you can sue that person in small claims court. However, that person moved. They refused to give me their address, their phone number, and they basically told me, and I have the names of all the people that I've spoken with at Geico, have said, too bad. That's the way it goes. I know that they've moved. I know that Geico knows where those people are, and they refuse to give me the information. So how do I serve or get any kind of restitution? I feel like I've really gotten it from Geico. So can you help me with that later?
Well, yeah, we'll take a look at your specific case. In general, we wouldn't be able to do something with regard to the small claims court case or the potential litigation against that party, but the insurance aspect certainly, and we could also point you in the right direction in terms of possibly getting information on the other party through DMV, through the filings that are required after accidents. So we might be able to assist you on that side too.
That would be great. And then just one last thing. I just want to say that, I have always carried insurance. I believe that I had to have a $100,000, $300,000 policy, and I even had uninsured motorist, just on the off chance. It was a junker, it was my commute car, but I really thought I was covered. And Geico said, You would have been covered if you had uninsured motorists, but you have an underinsured motorist who hit you. And that's where it's just not right. So I'm happy to talk to you later. And I will say this, I want to add this. Jerry Hill's office has been very helpful with me, Amanda in your office, because I actually have to share the $5,000 with Caltrans because she hit a sign before she hit me and pushed me into another car. And Caltrans took over a year. I was hit April 16th in 2010, and I don't have a dime for my car yet. Thank you.
And then so we'll help you afterwards figure out how to navigate DMV to see if you can get the address. But if that doesn't work, I mean, I would also think about, I mean, you could, and you probably thought about this, but for probably a fairly minimal amount, you can also hire a processor. But even though it's small claims matter, you could hire someone who go out and knows how to find people, and that might be a way to go too. So here, this question is, what's being done about businesses moving people from an employment status to an independent contractor status in order to avoid requirements to carry workers' compensation insurance and other health insurance products? And this individual indicates that as an owner of a home care agency that actually employs people, they're noticing other players in the home care agency market moving to a independent contractor sort of approach. And it is true, unfortunately, what is occurring, and this isn't the only industry in which it's occurring, is that some businesses, in order to reduce their risk and liability for employees, are moving to a contract situation where they're contracting for employees. In the workers' compensation area, we have some jurisdiction to go after those sorts of arrangements if they're sham. In other words, there are laws and rules that govern the question of whether someone is an employee or a contractor, and it has to do with whether or not, generally speaking, you essentially manage your own work and have a degree of autonomy and independence with regard to how you accomplish your work versus employees who, under our laws in California, by definition, are more directed and under more of a kind of a command and control circumstance. So there have been some cases where companies, in order to try to evade the responsibility to have workers' compensation insurance, will seek to misclassify workers. The other way that occurs, unfortunately, is misclassifying the type of work the individual's doing, because there are oftentimes higher workers' compensation premiums associated with riskier work or people that are less senior and less experienced doing work than less risky work or people that are more serious or more experienced. So if you have evidence where employers are engaging in that sort of behavior, we have zero tolerance for that at Department of Insurance. We have investigators who will, if we're presented with evidence of this, will investigate it, we'll work up the cases. We provide grant funding to district attorneys like the San Mateo County District Attorney to prosecute these cases. And the other way it can occur is underreporting of payroll. Some employers underreport their payroll for purposes of evading certain labor requirements, including the requirement to have adequate workers' compensation insurance. So we have no tolerance for that because the vast majority of employers play by the rules, and it's really unfair to them if some folks are not playing by the rules. Similarly, if there are injured workers who are taking advantage of the system, maybe as has happened in some real-life cases, an individual claims a shoulder injury, and then you learn that he's out or she's out every week with the bowling league, bowling with that same shoulder. If you have evidence of that, we have zero tolerance for that as well at the Department of Insurance, because the way this system works is people are entitled to get workers' compensation insurance for legitimate injuries, but if they're trying to rip the system off, we have no tolerance for that as well. So if you have evidence of that, contact our department as well, and we can investigate that too. Yes, sir. Dave, go ahead. Okay. Yes, over here.
Yes, I just wanted to mention that we do have some requests for assistance forms back here. They're with my associate here, Isabel, so if you need to file or fill out a form, just please see Isabel in the back.
Hi, this is follow-up. Hi, Jerry. The legislature, why haven't you, I mean, I've been driving for 45 years, same insurance requirements, 15 and 30. You know, I'm sorry, why isn't the legislature ever, I mean, I carry a $500,000 policy on my car. Why don't you require everybody? Because if somebody plows into me, why do I need to sue State Farm to get money for me?
Go ahead, Dave. That's a good question
Sure.
for you.
That's it. No. It is a good question. I think
it's a tough question.
And I'll take a stab at it, and then because I was in the legislature too, and I think that the balance that is struck there is that you and one or two other of the questioners who have raised this question about the existing coverage minimum requirements have said, wait a minute, they're too low, there ought to be more, and that's a fair question. But the other side of that coin is if the legislature were to decide to do that, that would have a direct impact on premium. There's just no question. And so that also could have an impact then on the number of people that can't afford to carry insurance too. And so that's the balancing act that the legislature has to strike in considering that particular question. And so far, there hasn't been a real push by motorists in the state of California urging their elected representatives to make that change, because I think, although admittedly, as some people have pointed out correctly, these limits, you question yourselves about why they're so low, but other people are worried about the premium impact of making that change. So I think that's why there's been essentially stasis with regard to that issue over the past couple of years. And I'll let Jerry add anything you want to add.
No, I think you've answered it perfectly. That is the problem and the challenge that I think the legislature has, and we've not received, there aren't the overwhelming calls and consumer complaints about the inadequacy of insurance, and I think the issue of the cost increases, and then those who would be driving probably without any insurance would increase substantially. And I think we're out of time, but what we can do, if you we'll be here after if you have a question, and you can certainly talk with the experts from the Department of Insurance, and if you have a question related to me, I'd be happy to answer it as well.
Great. Well, we really appreciate your kind attention as an audience. We're happy to stick around and ask, as Jerry has said, answer additional individual questions we weren't able to get to. I think Elena did have a question from someone, and she wants to encourage that person to see her afterwards. So go ahead, Elena.
Right. This was a question about Medicare Advantage health plans. Peninsula Hospital was just dropped from Anthem Blue Cross. Could you just come up and see me in the back after we're done? Great.
And then, again, our hotline number is 1-800-927-HELP. And if you no longer have the letters of the alphabet on your phone, like me, I believe that's
4357.
4357, thank you. 1-800-9, I don't have the numbers on my phone either. 1-800-927-4357, that's our hotline. We have a website, www.insurance.ca.gov. We've got lots of materials in the back. Help yourselves to those materials. If you have particular issues of dispute with your insurance company or your agent or broker, we also have consumer complaint forms in the back as well, where we're happy to take your information. Thank you very much. And finally, I want to thank Assemblymember Jerry Hill and his fine staff. You have a great representative here.
And join me in thanking Insurance Commissioner Dave Jones for his great leadership with the Department of Insurance. And we're so fortunate to have him there. So thank you, Dave.